Guys, so Lisa and I went out this morning and looked at an investment property, and I thought I would share my thought process with you while we were checking it out. A quick way to figure out if an investment property is worth the investment is to do a quick cap rate before you go. So what you want to do is figure out how much the monthly rent would be that you would get, multiply it by 12, that would be your yearly net, and you want to divide that by the total acquisition cost. That's going to give you a quick cap rate. Cap rate is your return on investment. It's kind of like the interest you would make if that money was in the bank. So anything 10 or above is considered a good investment. The property my husband and I purchased 4 years ago, we got for $104,000. We put approximately $20,000 in improvements to get it ready for tenants. So our total acquisition cost was $124,000. We get $12.50 a month on that rental unit, which is $15,000 a year. When you divide that by our total acquisition cost, it's a 12% cap rate. So that is a decent investment for us. We were even able to refinance 3 years later and cash out all our equity, so we had money to pay our kids' tuition. So the unit we looked at today was in the same neighborhood. It was priced at $129,000, so a little higher than we had paid. But when we went inside, it really needed a lot of work. I'm estimating $40,000 to $50,000, and that's based on just what I could see. There was a terrible smell. It smelled like mold. There was a horrible addition on the back that needed to come off. So when you think about all that, probably maybe not a good investment, especially at this price, because we're going to get the same amount of rent. It's in the same neighborhood, same amount of bedrooms. So it's really an 8.8% cap rate, which isn't great. And you don't know what kind of headaches you're going to get into when you start tearing down that addition. So I hope that was helpful. If you have any questions about investment properties, let me know. You also need to take into consideration what the taxes are, HOA fees, make sure it's not in a flood zone, because all those things can add to your costs, which will lower your net. So anyway, if you have questions, let us know, and I hope this helps you real estate like a boss.